Hello, and welcome to the fourth episode of the True Dollar web series. As you may know by now, Texas Trust will be presenting a monthly webinar on Facebook Live every second Tuesday of the month to help our community and members manage their finances better during the tough times we're living in. My name is Washima Huck. I'm a business and community engagement partner for Texas Trust, and I will be your moderator today. You are welcome to engage with us by leaving comments or questions during the live session. We will be sure to answer as many questions as we can in the allotted time or get back to you individually. Savings and checking may be the most basic and fundamental pieces of banking. However, a global pandemic has brought about a lot of uncertainty with consumers needing to rely on savings, finding ways to save more, or use the virtual features that come with their checking account to conduct banking safely and socially distant. In this hour, we hope to present you with a few best practices to help you save more and use your checking account to the fullest. But first, we at Texas Trust would like to highlight some resources accessible to our communities. So every month, we will be highlighting a nonprofit organization located in one of our Texas Trust towns. April's nonprofit organization is Bridges Safehouse. I would like to invite Nicole Hernandez to share how they are an incredible resource for our community. Nicole will stay on until the end to take any questions or comments our viewers may have for her. Nicole, over to you.
Hi, thank you for having us here. Thank you, Washima, for that introduction. We're so glad to be able to share with the community about the resources that Bridges provides. Bridges is located in Cedar Hill, although we do serve individuals and families all throughout the DFW area. Primarily, we have not only a safe house for women that are in crisis. So we do have housing resources for those that have lost their jobs or just experiencing financial difficulties. Sometimes people are just one paycheck away from homelessness, and we don't recognize that that's going on right here in our community. We also offer a community resource center where we do have some financial assistance available to help people keep their homes. So we do offer rental assistance, utility payment assistance. We have access to food resources. One of our biggest things that families are needing and really started needing at the beginning of the pandemic are diapers. We have a diaper pantry where families can get the diapers and wipes that they need for their babies. So all of our different resources can be found on our website, bridgescanhelp.org. So please contact us, reach out if you know a family that's in need.
Thank you so much, Nicole. That's a lot of great information, and for providing your contact information. We'll be sure to post that in the comments soon. And now just a little bit about Texas Trust. So as you may know by now, our mission is to build brighter financial futures, and we have been doing so since 1936. We are a not-for-profit company. That means we invest profit back into the credit union to help our members and communities by offering higher savings rates, lower loan rates, and through community engagement. We are a full-service financial institution with 20 locations in the area. For more information, please visit texastrustcu.org. And now I would like to present our presenter for today, Stephanie Sides. Stephanie Sides is our Vice President of Retail Quality Control and Projects. She manages our branches in Athens and San Angelo, as well as projects related to vendor management, business continuity planning, and policy and procedure updates. She graduated from Texas Tech University with a Bachelor's of Arts in University Studies with an emphasis in personal finance and human resource development. She has worked in banking for 16 years, 10 of those being at Texas Trust. She started as a teller at a bank and quickly moved into a supervisory position. She made a decision to leave that bank and started her career with Texas Trust as an assistant manager. And then she got promoted to branch manager and then to assistant vice president for the retail operations department. Yesterday, she actually got promoted to her current role, so congratulations to you, Stephanie. She has served on Texas Trust Community Unity Team Board and has participated in several Cornerstone Credit Union League conferences. Stephanie, we are extremely thrilled to have you present today's webinar. I am going to turn it over to you now.
Well, hello everyone, and thank you, Washima, for the wonderful introduction. I am so excited to be here and share this information with everyone today. The goal of this seminar is to give you the knowledge and tools to understand your savings and checking options so that you can make more informed decisions about your financial future. Today, we will discuss some savings trends, different types of money managers, reasons why people do not save, tips to save more, emergency savings, the importance of a checking account, and what features come with different types of checking accounts. Also, some best practices for the checking account and additional resources that are available to you. We'll go to the next slide. First, let's talk about savings trends. Average savings had declined since the recession in 2008. According to the US Bureau of Economic Analysis, personal saving rates hit a record of 33% in April 2020, bouncing back right after the onset of COVID. This is also a result of the decline in spending. Sadly, now more people are relying on their savings to cover expenses, especially if they lost a job or a loved one from COVID. We can go to the next slide. We'll start thinking about savings. It is really important to assess the way you manage your money. There are 4 basic types of savers. There's the earn, spend money manager. These people typically live paycheck to paycheck and find it very difficult to set aside money for savings. Then we have the earn, spend, borrow, spend money manager. They typically finance their standard of living. These money managers like to have the latest and greatest in cars or shoes, even if they can't afford it. The third type of money manager is the earn, spend, save money managers. They know the importance of savings, but there is always something that gets in the way of actually saving. Most of us fall into this category. Last, we have the earn, save, spend money managers. These are the ultimate savers that save for emergencies and plan for future financial goals. Now that we know the different types of money managers, you should be able to identify which type you identify with and make a conscious decision about how you start spending your money in the future. Now let's take a look at why people may not save money. We'll go to the next slide. We'll review some of the reasons that saving can be really hard. Saving money may sound easy, but it can be easily avoided. The top 10 reasons people do not save money are: people just can't say no to their wants. Number 2, people think it's too early to save. Number 3, there's never enough left over to have savings, or they have other priorities. Sometimes addictions or gambling problems may get in the way. Maybe we're not saving because we experienced low income as a child and do not know how to save. Maybe cultural or family values get in the way from our savings. The 7th reason is credit doesn't feel like cash. Number 8, there may be a false belief or genuine income or what they can afford. Maybe you are living beyond your means. There may also be a lack of financial literacy. And lastly, lifestyle maintenance or having that self-image of having money may get in the way. If we'll go on to the next slide, we've identified why people do not save, but here are a few tips that can be really helpful to help you save more. The first tip that I have is to pay yourself first. I like to recommend allocating 10% of your paycheck to savings. You can add savings to your budget so you don't forget to save. Use a budget to match your income with expenses and track your expenses to find spending leaks and then evaluate. For example, maybe paying for cable versus Netflix. You'll have to weigh your options on which is best for your budget. If your income is greater than your expenses, then you need to save more. If your expenses are greater than your income, then you may need to evaluate and make some changes. Having an accountability partner also helps to stay on track, and you can encourage your entire family to participate in budgeting. Putting savings on autopilot by setting up automatic transfers to a savings account also helps build that savings account. COVID and even the snowstorm we had a few weeks ago have pushed more people to rely on and use their emergency savings to pay for unexpected expenses, especially if they have lost their job. Everyone seems to have extra coin laying around also whenever you get that change from the grocery store. That's a great opportunity to start saving. You can even trade in your coins for cash. We have several coin machines at most of our branches. Another example to help you with savings is to never pay for your own money. For example, a payday loan usually ends up costing you more in the long run. The next example of helping you save money would be to invest and earn interest. Talk to a financial advisor and plan for your retirement. Save for your children's education. We usually like to recommend using the rule of 1/3. Usually 1/3 of college can be financed from scholarships or grants, 1/3 from a parent's contributions, and then the last third from student loans. That's always a good rule of thumb to follow. Also, using a savings calculator or online budgeting tool will help you grow your savings account. Get creative. You can make gifts instead of buying them, use coupons, or cook at home instead of going out to eat. All of these examples are ways to help you save. Now that we've identified some saving strategies, let's talk about emergency savings versus goal savings. Washima, if you'll go to the next one for emergency savings. Let's start off with emergency savings. Start off by saving 1 month's mortgage payment, then save 1 month's income. Then aim for 3 to 8 months worth of expenses in your savings account. In the event you lose your job or have a health emergency, you'll have money to pay your mortgage, rent, utilities for a few months until you're able to get back to work again. The set-aside savings, if you think about home repairs, especially with the most recent weather that we've had, I know a lot of people ended up having home repairs that were an unexpected expense. It's a good idea to save for 3 to 4% of your home's value per year so that you have that emergency savings in the event you need home repairs. To start goal savings, you should determine short-term goals, which are usually 0 to 6 months, medium goals, which are 1 to 5 years long, or long-term savings, which is 5 or more years. During this goal setting period, it's important to assess your needs versus your wants. You can trade your short-term splurges for long-term rewards. For example, trade up buying that coffee every day to save for your first home or starting your own business. Once you determine your financial goals, we can turn them into SMART goals. SMART is a great acronym for setting goals. The S stands for specific, M is for measurable, A is for attainable, R is realistic, and finally T is for timely goals. An example of a SMART goal would be if you wanted to save $1,200 a year for a trip, breaking that down to $100 a month, then breaking it down even further to $25 a week, and about $3.57 a day. Doesn't saving $3.50 a day sound a lot more attainable than simply $1,200 a year? By using this SMART goal strategy, you'll be more successful in your savings plan. It is always a good idea to review your financial goals after major life changes. We can go to the next slide. We've talked a lot about savings, and you might be wondering what tools are available to help you. There are hundreds of resources available online, but here are a few that can help you get started with your own savings plan and stay organized. There's Every Dollar, Mint, an Excel spreadsheet, and my absolute favorite is our Money Manager, which is available through Texas Trust Online Banking. You'll go to the next slide. Now that we've learned about savings, we can talk about checking accounts. You may ask yourself, why do I need a checking account? Checking accounts provide safety for your money. The NCUA and FDIC both insure up to $250,000 per depositor per institution per ownership category. Having your money in a checking account is safer than a piggy bank, a mattress at home, or even in your wallet. Checking accounts also give you access to your money. Having a checking account gives you access through a debit card, a mobile app, online banking, ATM machines, and you can also track your expenses and have that peace of mind knowing where your money is actually going. Checking accounts also help build your relationship with the financial institution. This can be really important if you need loans or other accounts in the future. Once we determine the need for a checking account, it's important to know the different types of checking accounts that are available. Some of the most common checking accounts are debit accounts, money market accounts, and then there's the traditional checking account also. If we'll go on to the next slide. The most common type of checking account is the traditional checking account. Most checking accounts have several different types of features. It's important to realize what features may be available. Checking accounts can earn dividends, offer paper or e-statements, online banking, debit cards, online bill pay, mobile banking, a mobile deposit, e-alerts, money transfers, debit card rewards, where you actually get money just for swiping your card, access to ATMs, check writing abilities, cashier's checks, overdraft protection, notary, ID theft protection, and account research are some of the features for a traditional checking account. It's really important to remember when choosing a checking account to ask if there is a minimum balance. Usually, minimum balances may be required to earn dividends or avoid fees. Some accounts may charge monthly service fees, transactional fees, or even overdraft fees. Also, it is important to ask when your funds will be available. Some new accounts require your funds to be on hold and may not be immediately available for use. Here at Texas Trust, our checking accounts give back. Our Spirit Debit Rewards allow us to partner with local schools and give back to that school with qualifying purchases you make. This program allowed Texas Trust to give back over $2 million. You can visit texastrust.gives for more information. Rashima, if you'll go to the next slide, please, ma'am. Once you've decided to open a checking account, there are some best practices to follow. Make sure that you read and understand the account agreement and know the fee structure. Look for a high yield checking account. Take advantage of direct deposit when it's available. Set up e-alerts to help uncover unauthorized transactions and prevent overdrawing your account. Also, Make sure you have enough money to cover your checks and all of your spending. Use the money management tool that comes with your checking account to track your spending. Pay your bills online using a bill pay to decrease cost and worry-free of check processing. If you do not need liquid cash to sit in a checking account, consult with a financial advisor about investing your money for your retirement or your child's education. We've talked today about checking and savings accounts, but it is important to know what resources are available if you are facing financial hardships. For financial hardship assistance, we do have the following resources available to you. Washima, can you go to the next slide for financial assistance? Thank you very much. So of course we have Nicole on the call with us with Bridges Safehouse. They are available. There's also WIC, SNAP, Medicaid, and CHIP, Disaster Unemployment Assistance, Dallas County Assistance Programs, Tarrant County Assistance Programs, the Housing Authority, and you can even contact your local utilities, insurance providers, and lenders to work out a plan. Thank you for joining us today, and I hope we've been able to give you resources to help build your financial future. I will turn it back over to Washima now to open it up for questions.
Thank you, Stephanie. You've provided us with a lot of great information, and I would like to open the floor up for questions. If you are watching live, please do utilize the comments function to ask us any questions. There have been some questions that were asked that are we've answered via social media, so I'm looking for some new questions or comments. Somebody did comment that they have a UTA Spirit Debit Rewards card through Texas Trust. I also have one, and I'm sure you're an alum, so we take pride in having those cards. And we'll try to answer as many questions as we can today. If there are questions that are best answered offline, we will message you directly, but you are welcome to ask us or Bridges Safehouse any questions that you may have. What is a UTA card? That is a great question. So we have cards that are for the Spirit Debit Rewards program, and they are linked to different either UTA or another school district. And whenever you make an eligible purchase, we do give a percentage back to support that school or university. So we have a Spirit Debit Rewards. We have various cards that go back to support UTA athletics and their general scholarship fund. How do I get an SDA card? I will let Stephanie answer that question.
Thanks, Washima. Yes, if you are interested in getting a Spirit Debit Rewards card, you are welcome to come visit any of our locations. You can also make an appointment online through our appointment scheduling tool, and you can also apply directly on our website to get one of those cards.
Absolutely. And my next question is, where's the best way to save for your, if you have any younger children, what's the best way to save for their college education?
That's a great question also. You know, whenever you have young children, it's always a good idea to start them at a young age. We also, you know, a lot of times can set up a child savings account for them. And also, I still like to stick with that rule of the 1/3, setting up those automatic transfers to go to your savings account from your checking account. When that direct deposit hits, every week I have mine set up to where it goes to a savings account. A portion of my paycheck every week goes to a savings account. So automatic transfers are always a good way. You know, depending on the age of the children, I always recommend start early. If you're looking for college funding, it's always a good idea to start with those scholarships and grants early and do your research for sure.
Awesome, that's a great answer. And we also did a webinar on financing college back in February. That is on our YouTube page as well on Facebook. So you're welcome to watch that for more information. Next question is the online bill pay feature automated? Do we schedule payments and are they automatically paid, or do we have to manually go in each month and click pay?
That's another great question. So we do have both options available for our membership here at Texas Trust. You can set it up for recurring monthly payments, or you're welcome to go in and pay it each month on your own.
Fantastic. Next question is, how does the school get money from the cards, the SDR cards? Well, I can answer that. We do send the money over to them at the end of the month, and we make sure they get their money so we can support education. I have my boys set up with a savings account, and when they are old enough, we will get them a checking to start learning how to utilize it. That's great. Thank you so much. We do offer student checking. That is amazing. Somebody commented that they love using Apple Pay with the Texas Trust debit card. And I have another question. Could you repeat the savings guidelines again? Example, the 1 month mortgage, etc. I missed that part. I can go back to that slide. However, we will be publishing this, and this video will stay on Facebook. So you're welcome to watch it after the fact as well. But Stephanie, I mean, if you want to just go over your notes and highlight the savings, emergency savings guidelines real quick, or summarize it, you're welcome to do that.
Sure, we can go back through that real quick. So my recommendation to start an emergency savings is start off by saving just 1 month's mortgage payment, then move to savings of 1 month's income, then aim to 3 to 8 months worth of expenses.
Thank you.
You're welcome.
I think that's all we have. Don't see any other questions, and I'm sorry if I missed something, but I think we're good. Fantastic. Well, thank you so much for engaging with us and asking those great questions. If you would like to learn more, become a member, or talk to us directly, please feel free to contact us using the information on the screen. We also have some links posted in the comments for if you would like to schedule an appointment or have one of us give you a call. We do have some information about Bridges Safehouse as well. If you would like to learn about them, please click on that link. Mark your calendars. Our next Facebook Live webinar is going to be on Tuesday, May 11th at noon. We are going to do a deep dive on understanding credit. That is a very favorite topic of a lot of people in the industry. Thank you so much for tuning into today's webinar. And remember, Texas Trust Credit Union is here with you every step of the way for all of your financial needs. See you next time.